Singapore taxation system. There are several reasons for investors turn to Singapore for establishing their operations, and one of the determinants is Singapore tax regime. Well known for its attractive corporate and personal tax rates, tax relief measures, non-taxable capital gains, one-tier tax system, and extensive double tax treaties. Persons, including corporations, partnerships, trustees, and bodies of persons carry on any trade, profession, or business in Singapore are chargeable to tax on all profits that accrue in or derive from Singapore, as well as income received from outside Singapore. There are different types of taxes in Singapore. Let's move on to the definition for each type of taxes. Income tax is chargeable on income of individuals at progressive tax rate, with current highest personal income tax rate at 22%, and companies are taxed at a flat rate of 17% on its chargeable income, regardless of whether it is a local or foreign company. Property tax is taxes imposed on owners of properties. Motor vehicles taxes are taxes, other than import duties, that are imposed on motor vehicles. These taxes are imposed to curb car ownership and road congestion. For custom and excise duties, Singapore is a free port and has relatively free excises and import duties. Excise duties are imposed principally on tobacco, petroleum products, and liquors. Also, very few products are subject to import duties. These duties are mainly on motor vehicles, tobacco, liquor, and petroleum products. Goods and Services Tax, GST, is a tax on consumption. The tax is paid when money is spent on goods or services, including imports. This kind of indirect tax is also known as value-added tax, VAT, in many other countries. Currently, the tax rate is at 7%. For payments of a specified nature, example, royalty, interest, technical service fee, etc., to a non-resident company or individual, it is required to withhold a percentage of that payment and pay the amount withheld to IRAS. This is called withholding tax. Singapore has a network of double taxation agreements, DTAs, with more than 80 jurisdictions, works to an advantage of any financial institution using Singapore as its regional or global hub. A DTA is an agreement concluded between Singapore and another jurisdiction, a treaty partner, which serves to relieve double taxation of income that is earned in one jurisdiction by a resident of the other jurisdiction, including withholding tax. Betting taxes are duties on private lottery, betting, and sweepstakes. Stamp duty is imposed on commercial and legal documents relating to stock and shares and immovable property. Others. The two main taxes are the foreign worker levy and the airport passenger service charge. The foreign worker levy imposed to regulate the employment of foreign workers in Singapore. As we have received numerous inquiries in regards to the withholding tax, let's go a bit more details on what are the payments that are subject to withholding tax. Under the Singapore law, a person known as the payer who makes payment of a specific nature, example, royalty, interest, technical service fee, etc., to a non-resident company or individual, known as payee, is required to withhold a percentage of that payment and pay the amount withheld, called withholding tax, to IRAS. So, what are the payments that are subject to withholding tax? They are interest, commission, fee in connection with any loan or indebtedness, royalty or other payments for the use of or the right to use any movable property, payments for the use of or the right to use scientific, technical, industrial, or commercial knowledge or information, or for the rendering of assistance or service in connection with the application or use of such knowledge or information. Payments of management fees. Rent or other payments for the use of any movable property. Payments for the purchase of real property from a non-resident property trader. Structured products other than payments which qualify for tax exemption under Section 13, Sub 1, Sub ZJ of the Income Tax Act. Distribution of Real Estate Investment Trust, REIT. Double Taxation Agreements, DTAs. Singapore has a network of DTAs with more than 80 jurisdictions, works to the advantage of any financial institution using Singapore as its regional or global hub. DTAs is an agreement concluded between Singapore and another jurisdiction which serves to relieve double taxation of income that is earned in one jurisdiction by a resident of the other jurisdiction, including withholding tax. It spells out the taxing rights between Singapore and her treaty partner on the different types of income arising from cross-border economic activities between the two jurisdictions. It also provides for reduction or exemption of tax on certain types of income in accordance to the rates in the DTA. However, only Singapore tax resident and tax resident of the treaty partner can enjoy the benefits of a DTA. Singapore tax residents and certificate of resident, COR. Companies earn foreign income from a treaty partner may wish to claim the benefits under the DTA that entitles a company not to pay tax or to pay tax at a reduced rate in the foreign jurisdiction with the submission of COR to foreign jurisdiction to prove Singapore tax residency. Tax resident of treaty partners. Tax resident of treaty partners can also enjoy the benefits of the DTAs when they derive income from Singapore with the submission of COR to IRAS to prove tax resident of foreign jurisdictions.